The prospect of the Fed's interest rate hike and an increase in the U.S. crude oil inventories act as determining factors in the energy market, whereas the positive impact of a growing demand in China, as well as the news about Russia's intention to cut oil production, have taken a back seat. From a technical point of view, Brent crude oil futures entered a correction after nearing the support level of $80. However, the upside momentum fizzled out at around $83.50. As a result, the asset got stuck in a sideways range between the levels of 81.50 and 83.50. If the quote consolidates above 83.50 on the 4-hour chart, the benchmark will most likely resume its corrective move. If the quote falls below 81, it will approach the 80 mark and probably break through it. Meanwhile, the Russian Foreign Ministry said that the government was working on retaliatory measures after the West announced a new round of sanctions. This somewhat reassured investors who were afraid of a rather tough response. Against this background, oil prices have decreased slightly. However, this does not negate the fact that the energy market will continue to rebuild, resulting in even longer and more complex supply chains. This, in turn, will drive the price for final consumers up. So, oil still has great upside potential. Unlike oil prices, the ruble reacted quite positively to the news. Driven by the official statement by the Russian Foreign Ministry, the ruble posted modest gains. However, the main reason for a stronger ruble is extremely oversold conditions. Moreover, this factor still persists. Thus, the most likely scenario for the near future suggests another attempt to fall below the level of 74 rubles per dollar. The dollar-ruble pair is currently pulling back from the 76.50 mark, the greenbackers of a boat, which makes the current pullback logical. If the quote stays firm below 73.50, this pullback will turn into a full-fledged downward correction. Otherwise, the US dollar may resume its bullish run. Yesterday, gold tried to gain value, reversing earlier declines. However, its upward move was short-lived, and the yellow metal returned to the area of $1,810 per ounce. After all rising geopolitical tensions and an ever-increasing struggle for strategic resources are forcing investors to reconsider their attitude to gold as a safe haven asset, and this leads to a decrease in its value. In the short term, the metal is likely to dive to at least $1,800 per ounce. That's all for now. We wish you profitable deals. See you in our channel with a new video in a couple of hours.